My name is Morag Watson and I'm a private client partner with Assets. Today I'm going to provide a brief overview of the clawback of child benefit, which can sometimes take taxpayers by surprise. The clawback provisions were introduced in January 2013 to help offset the national cost of child benefit. These operate to recover some or all of the child benefit paid in a tax year. In the Spring Budget 2024, the Chancellor announced that from the 6th of April, the clawback will be triggered when an individual's net adjusted income exceeds £60,000 in the tax year in question. The recovery is made at the rate of 1% per £200 of income in excess of £60,000, so the full amount of child benefit received will be recovered once an individual's adjusted net income exceeds £80,000. The issue for many is that the recovery of the child benefit is supposed to be self-assessed through the taxpayer's tax return. In other words, the taxpayer is supposed to realise that the clawback applies and to calculate the amount of the child benefit that is due to be repaid. There are a few traps within the provisions, which is why taxpayers often overlook the fact that a clawback might be due. These traps include the fact that the clawback is not necessarily from the claimant or recipient of the child benefit. In the case of a couple, it is the higher earner who is assessed to the clawback, regardless of whether or not they are a parent of the relevant child or indeed in receipt of the child benefit income. The couple do not have to be married or in a civil partnership. Simply living together is sufficient to bring them within scope of the high income child benefit charge. It is possible that the taxpayer who is caught under these rules may in fact have no idea that their spouse or cohabitee is in receipt of child benefit. The high income child benefit charge can be problematic for tax advisors who may not be aware of young children or indeed of the circumstances of both parents. Many taxpayers will take the view that it is not worth claiming child benefit simply to have to repay it, whilst others like the comfort of receiving a specific sum of money every 4 weeks, even if it does mean paying it back after the end of the tax year. Taxpayers can, of course, elect not to receive child benefit. However, it is important to still register eligibility for the benefit at the birth of a child, as it can secure entitlement to state pension for those on maternity leave caring for young children. It is also worth noting that child benefit can only be backdated for up to 3 months if the increase in thresholds means that a partial claim may be made for the 24-25 tax year.